Welcome back, everybody, to another video. If you wanna learn trading, why don't you come and learn from Siri? You guys already know, man. I just want to praise God today, man. It's a happy Saturday. I will give you all my Jesus. I will give you all my praise. I will give you all my Jesus. I will give you all my praise. All right, guys. That was my praise and my devotion to God on Saturday. It's just a happy Saturday. Today is a Sabbath for some people, and or tomorrow will be the Sabbath for some other people. But um, I'm not a financial advisor. Um, so you know how it goes. Blah 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 blah. Your risk, your problem, your account. Don't blow it. So we're gonna get to it, man. Wow. The God has been so good this entire week. You wanna know why? Because, you know, everything around my life right now is just, I don't know. I don't know where the next steps are. I don't know where to walk. I just know that I'm walking continuously with God and I'm moving forward with God. And that's the most important thing. Um, and like, it's just crazy to me how, like, everything around me is not to the best of its situation, or I don't know it all, right? But what's going to happen next? Like, God is forcing me to lean on Him and to be under His understanding because I posted something in the group, and this verse has been speaking to me this week, and it's all about Proverbs 3:5, 6, which is saying, "Trust in the Lord with all your heart, and lean not on your own understanding. In all your ways submit to Him, and He will make your path straight." Um, and it's like, regardless, when I try to do things out of my own understanding, it's just not working out, man. So like, you know, God is putting me in a situation where not even out of my own understanding, I could understand my next steps. You know what I'm saying? So I'm leaning on Him, right? Because He will make my path straight. And how has He been doing that to me this week? I mean, guys, this week was, man, the consistency this week was amazing. We took some losses, of course, because we're not perfect, but there was such a big learning curve this week. I was able to hold positions this week. Let's look back. Let's look back. This week started on the 23rd, right? If I go back to the 23rd, I wasn't really trading from, because remember I told you guys I don't trade Tuesdays and Mondays. I don't try to do too much. Um, Especially because we was waiting for Friday's high to be taken, right? And then that occurred. That happened. Going into the consequent encouragement, then that was Tuesday. That we went up there, but I had mentioned that I don't trade Tuesday, so we just stayed away, right? And then just the rest of the days. I mean, this is Wednesday. I mean, look at this crazy miraculous move that we caught. We caught about by the end of all this, we caught like this trade right here. I think I caught like 130 points or 130 handles. Um, it hit the terminus that we were looking for, the failure swing, as you guys can see, positions up here, all the way down here. Um, and then on the remainder of that day, I caught another 130 points. So that's not the same entry that was up here. I had seen that they were confirming the direction, so then they took it lower, and this is still during the. Let me see. Actually, yeah. So this was the 25th on Wednesday, and then Wednesday I caught this other position here, which is another 130 points. So that right there is like 260 points, and then I mean, this trade is still on. This is AUD USD. I don't even know what it's doing. I haven't checked it. This trade, I mean, look at that. Isn't God beautiful? And then, right, this happens on the 26th was Thursday. Look at Thursdays. Thursday's beautiful trade. This trade was gorgeous, and then we just had price just another 150 points, right? Like, look, another solid 150 points. I mean, like, guys, look at this from top to bottom, right? And then we closed right before 12, so we caught all of that, and this was our thing. And then yesterday, right? Yesterday we catch it at the tippity top, right? I took like two losses, like in here after they'd taken done the three swing pattern, so I kind of sold it right here in this fair value gap because I thought they would leave the range. Especially when they were like they closed below this range and then they return here, but I was wrong. And so then I submitted to the idea that they were going to run it to a specific key level that is up here. And I'll show you guys what that is when we get to the charts. And so this was a note to myself this week is when you take a loss, let me get how do I get rid of this, guys? Like I just want to zoom into this chat. Let me see. Okay, cool. Yeah. So, this is a note for myself. When you take a loss, zoom out. Remember, you are human and sometimes you may oversee the important levels above. Took two losses before this one. Not big, but still just being transparent. So, I did take two losses, like I said, going into here. And then I sold again, like once we got like here, I think, to this order block, somewhere in there. Um, but there were small losses, right? Because it's all about risk management. So I have a daily threshold that I'm allowed to lose. Then I stopped trading after that. But these losses were very minuscule, tight stops type of thing. And then when we got here, this is where everything came. And then just look at that, man. We got more. We got more. Another 140 points. That's like 500, 600 points this week, man. This is like I can't even just. Can we thank God? Like I'm telling you guys, it's tough right now for me. But we still making it happen with trading because God is saying, He's listening to my prayers. He's listening to the desires of my heart. He's taking care of me. And that's just what it is, guys. Like, you guys think it's something else, but it's not. It's really not, man. And you thinking that, oh, out of my own understanding, I know that I can't pass a trading account, right? I'm speaking in third perspective here. Like, I'm speaking if I was in your perspective. Oh, you think that you can't trade, that you can't make it possible. But let me tell you, it is possible. It is possible. All this stuff is possible. You catching these majority of the week's move, this is possible for you. You just have to have faith. You cannot rely on your own understanding. Just because you know an order block doesn't mean that you know what that order block has to offer. You don't know. So you gotta lean in. You gotta ask God. All right? And I'm here not to be religious because this Christianity, there's nothing religious about being Christian. I'm following Christ. That's it. There's nothing, it's not a religion. It's a intimacy. It's getting to know him. It's building that relationship with him. And I'm at the start of my walk and I'm telling you guys, like, it's very life changing. It's very life changing. But anyways, I know you guys came here for the charts. Um, but I prayed that the enemy allowed you guys to go through those 8 minutes and be able to, soak that up. Soak that up. Because God is good all the time. That's why I always end my videos with that. God is good all the time. But we got some time today. Today is Saturday. We got some time today to talk, and so this is gonna be longer than the other ones. A little bit, not too much, but yeah, it's gonna be a little long. So Friday we had 8:30 a.m. core PCE price index. Um, like I told you guys, anything core PCE, CPI, PMI, like just stay away. If you're trading in that 8:30 hour just because there's news and volatility, like bro, you're gambling. This is where I say you're gambling. This is why I was saying on Friday, I was like, yo, watch what I said here. I said, this is what I said. They took the high first, and I was like, watch the high, be the second idiot to get in. 10 a.m. news, be careful, just trying to short a high. Red news coming in, right? And then I said, mark my words, 11 a.m. we tank. So many broken hearts here. because this was 10:32 because I told you guys 11, 11. I made the mistake of shorting before 11, but I had to. For me, it's not like, oh, I got to trade after 11. Maybe I should make it a rule. I don't know. That's something that I'm still learning because there's certain time elements that I'm using right now that are like kind of helping me navigate through it. So that's how I knew it was at 11, and not 10. So I had said so many broken hearts here. And I traded like around 10:48, something like that. It was nearing 11, but it wasn't after 11. So I got to get better with that. That's why I took the two losses as part of the reason. And then may the force be with me. And this is obviously after 11. Um, this is not after 11. This is actually 10:51. So it was still nearing that 11 a.m. hour. You guys get the point. I'm not trying to be perfect, but I'm just showing you guys what's possible. And then, of course, this is note for myself. I already mentioned that. And then, yeah, you guys can go through my Telegram and all this information is in here. I'm not gonna waste too much time here because, of course, I'm not gonna repeat myself. And then we had that news at 10 a.m. And like I said, 10 a.m. revised UOM consumer sentiment. It does damage because this news outlet is very, it's very, how do I say this? It's very draining for the mental capital because had you been trading in this 10 a.m. hour, while revised UOM consumer sentiment is there, you guys would see that it doesn't matter what opportunity you thought was there, they were still going to run your stops. They still were going to take your liquidity. You were the liquidity, my friend. Simple as that. So that's that. So let's get to the charts. I know that's what you guys came here for. Oh, where are my charts at? Oh, oh, oh. All right, cool. So I had mentioned on Thursday's call that it was possible for them to run up into Thursday's high. Um, and Thursday's high didn't get ran, of course, and then lower prices. Um, I'm sorry. Let me regain my thoughts because somebody's calling me. Just give me a quick second. Let me put this on pause, guys. Sorry, guys, about that. Somebody had called me, so I paused the video. So we're back at it again. Anyways, Thursday's high. I said that it was going to be taken. Um, and it wasn't taken, but there was a possibility that was going to be taken. We have the opening price of Thursday here, which we got close to that, but we really didn't get there all the way. And then I said that if they wanted to, they could have took Thursday's high for TGIF. But I also had mentioned that since Wednesday and Thursday were very expansive forward or lower, I mean, that we might see Friday be an inside day or, as I said, chop. But when I say chop, I don't mean chop in the sense that it's going to chop on the smaller time frames all day. I just mean that it's not going to break outside of Thursday's high or Thursday's low. So that's the whole point of an inside day. You guys see? It's inside of Thursday's day. Okay, because this is the daily candle that presents the day. This right here is an inside day. It's inside of Thursday. Okay. Um, so that's that. So then we're gonna break down to the 1 hour. And of course we still have, let me go back real quick, I'm sorry. We still have the drawn liquidity for the daily here. Like I said before, this is all sell side, then buy side from candles opening price and lower. Everything is efficient, so they should act here as a brick wall. If they want to redeliver into this here, they can. Specifically speaking, why? Because although there is sell side and buy side here, in here there's a lack of buy side volume. So we only have thin volume with the wicks. We need thick volume in here. So keep that in mind. So it can possibly scream lower into this order block here and then wick in here, but then snap back and close at this order block's opening price near it or above it. Doesn't matter, or a little below it, it'll close there. That's kind of what we want to see. So that's the intentions. We will speak about next week's analysis next week. Actually, yeah, yeah, we will do that. We'll do that now. Okay, let's do that. So here we have a fair value gap right here. Actually, this is for the lower time frame, so let's use this one. Right? This is the fair value gap that we're looking at for Monday, coming in Monday next week, Tuesday, Wednesday. We want to see price possibly get in there. To be honest, since we've been so like trending as well, like we've been dropping every day. Like I told you, this week we caught over 600 points. Um, the market definitely doesn't always just continuing going lower. I suspect that we probably get into a period where it may be like up, down, up, down, up, down days like this. That could happen here because this Thursday range is a 300 point range. So it's a large range, fairly large range, and they could decide to play in here and not break out of here and just halt the market before going lower. And since November is around the corner, they'll wait for, November to come into the market, maybe the second week of November, and not the first, but the second week of November maybe, and then really start making moves. But this is just me foreseeing things way ahead of time. Doesn't mean that it's gonna happen. It's just very possible. So because we have been moving these large amount of points lower and expanding, we can expect some sort of halting here where they'll hold the market here, allow positions to accumulate here, and then eventually get here lower when they decide to do that. Um, and yeah, that's what I'm kind of expecting. So um, those are things that I want to keep in mind. Doesn't mean that it has to happen, but the fact that I mention it, it allows me to be aware of it. So it's called the call out action. So Atomic Habits, James Clear talks about this. When you call something out, it's more likely of you to have awareness around it. And if it's you calling out to prevent something from happening, that awareness will help you to prevent from trying to do too much inside of something like this. So let's say that I come into Monday next week and I'm trying to short this again, or Tuesday it comes into the consequent encouragement here, fair value gap here, and then I'm trying to short this again, right? And then it just keeps chopping and chopping and chopping. On Tuesday, I take a loss. On Wednesday, I take a loss. You know, I have to keep that in mind. You know what I mean? Like if it's not giving me the opportunities I'm looking for, I have to keep this in mind always. And so that will help me stabilize and ground myself throughout the week and not over compulsively or impulsively trade. Okay, so that is the stuff I have for the daily. And then, right, we have the 1 hour. So the 1 hour sauce, of course, this is, like I said, Thursday high, Thursday's low. So we're going to keep that on there. And then we're going to go out to the 1 hour. And I want to, somebody was saying, hey, what is a rejection block? Or how do you know what rejection block to use? Or what is this? What is this? Okay, so I'm going to show you guys right here just a little bit. Um, there's a lot more to this, but this is like an introduction, I guess. Um, so I want to point out this specific fractal here. So we're talking about a fractal. Let me see if I can just zoom in. Where's the zoom? I know there's a zoom. Yep, there it goes. So I could zoom in here. So you guys see this right here, right? Just these two candles. Focus on these two candles. The rest are just complete utter garbage and they're not there. Okay. So just focus on these two candles here. These two. In fact, I'll do something. You can do that. This right here is a stop hunt fractal. And I mentioned this in the market maker models with the stop hunts and all the good stuff, right? I want you guys to look at this from a perspective that this right here is a stop hunt. Meaning that if this is a stop hunt, this also means something else. If you guys could see this clearly, this right here represents an accumulation, a failure swing, right? An opposing liquidity run. This is what this presents here. And then whenever we take this candle's low right here and we close below it, this is just an expansion or a continuation after the liquidity was taken. You have to look at price from these lens. If I were to zoom in on this, that's exactly what you would see. You would see what they call a zoom model, right? Shout out to Kish once again, right? If I go to a line chart, of course, it won't show that huge wick, right? But if you guys could see it, accumulation, failure swing, opposing liquidity run with that big wick up here, and then when price goes below here, that is a direction confirmation. So it's confirming that, hey, market structure is broken. So now there's a shift from the once that was, oh, I can't put nothing up there. I'm sorry, guys. So let me repeat this again. When the market structure shifts or that direction confirmation comes in after we take the failure swing, this right here, that once was the buy side liquidity that we needed to take, and price went for the opposing, right? The bias is bearish, but they went for the opposing liquidity. What is the opposing liquidity? If we're bearish on the higher time frames, the opposing liquidity would be buy side delivery. So they have to take out buy side before taking the market lower, because stop hunts are paired with expansions, right? They have to take out the counter liquidity, the opposing liquidity, the opposite side before they expand in the way that they need to expand. It's part of their manipulation, right? Power of three. All these things, they coincide with each other, but it's just a way for you to understand, right? If there's still buy side here, is it possible, or let me not say if it's possible, because anything is possible. We don't book the market, because when I speak like that, it makes it seem like it has to happen. I'm not imposing my way here, but what is the likelihood of price offering, you know, let's face it, 100-point expansion, 200-point expansion, 300-point expansion, 400-point expansion, 500-point expansion, big expansion, doesn't matter. Whatever you consider a big expansion, what is the likelihood of price expanding while leaving the opposing liquidity in the market, right? They also want to pair their orders. They want to find somebody. If these people are liquidity providers, they also want to pair their orders with the opposing party. The opposing party is here. Why? There's people with buy stops here. Breakout traders, right? Buy stops. Or there's people who are selling in here and they have their buy stops here as well, right? So there's people who are short. There's people who are also trying to go long after this level is broken. They're killing two birds with one stone. But if price is bearish, higher time frame bearish, they're going to pair these buy stops here, and then they're going to take price lower. So now, if we do this, if you guys can see, buy side, right? So accumulation, failure swing, opposing liquidity run of that buy side, and then they confirm here, They also confirm this order block here. So it's the change in the state of delivery. And what did I say in one of these last videos? I said, once the change in the state of delivery is confirmed, retracements are bound to happen. So they took it here, and then the next candle opens, and then they retrace. But they first go lower, and then they retrace. But you're expecting a retracement because um the retracement has to, in my opinion, and in my educated guess, I would say that the retracements, um, especially the higher the time frame, they do become a little deep inside of the order block. So best practice is always just to take that order block and point out 50%. And what you're waiting for is for price not to close above the 50% of this candle. It can wick in there. That's fine. Don't be nervous when the candle's going in there. But for confirmation purposes and confluences, you want to see price wick in it and close below, right? Because the candle's volume or the story is really in the bodies, not the wicks. The wicks are all broker related. That's why ICT always tells you guys we can go across 10 million brokers. And in those 10 million brokers, the feed is different. The highs and lows of these wicks are different. So what's always true is the body, which is the opening price, closing price. This is always true. It's absolute. But these wicks, no. These wicks are relatively random. So they punch into that. If you want to be aggressive and you just trade off the 1 hour, you can sell it right there. Just wait till it punches into this. And if you're a person who's like you're scared, what you can do um, is instead of trying to put all your, because the question would be is, oh, hey Siri, how high can this scream? Or how high can this go? To be honest, guys, it could go even all the way up to here. It can. It can do that, right? And then just close like this below or below 50%. Close here or close at 50% or below 50%, right? It could do that. That's not your job to understand, but you, since you know that this is all based off of 1 hour, and the 1 hour obviously takes time, it's a 1 hour, it's not a quick thing. So these retracements are going to be a little deep. You just keep that logic in mind. You can scale in your positions. You have to get very comfortable with scaling in positions. Um, if you don't want to absorb all this risk here, all you can do is split the positions. You know that anything above 50% is a valid entry or a valid point of opportunity. Okay? So what you do is if you're trading, let's say a lot, right? And you're like, okay, let's say you're having an internal battle that says, hey, your internal battle is, hey, how about if, I put this lot here, my big position of the lot here, all the 50%, and it goes way above 50%, right? And you're scared of the range that is here of 36 points. If you don't want to absorb 36 points, that's understandable, right? Some of us could only do 15, 20, 25. If your risk appetite does not allow you to be at 36, then I get it. This is a solution to that. Oh, but how about if it goes above 50%? Way above 50%. And I'm wrong here. You're not wrong. Maybe you just have to approach it a different way. Maybe you could approach it in the sense that, okay, I don't want to absorb 40 points, like my entire position with 40 points. So what I can do is I could split it across 3 positions. I could split it across 2 positions. Whatever works out best for you. Whatever you're comfortable with. If you're a person who really sees this, retracing deeper, you can put your first entry here, your second entry here, and then your second entry here, right? Or if you expect it to go in the premium portion of the premium range, what does that mean? Sorry guys. If you're expecting them to go into the equilibrium or the premium portion of the premium range premium range, anything above 50%, above the mean threshold. If you're expecting them to get there, you can also put positions here. So you could put positions here at the 50% of the actual order block, the mean threshold, and then you can play this. So those are just little things or little tricks that you guys can do to help confront those internal battles. And I'm not saying that it's going to completely allow it to go away, but you'll be able to absorb less risk, and some entries will be more precise than others, and it will still allow you to capture a great opportunity, right? But if you're a person who, like, you're very impulsive and you place your position right here, and just because of retrace, you're just going to enter, which is good. You could do that, but that's a little aggressive, right? Um, so it's always good to have rules and allow yourself to just be patient with the market. And these are one of those things, using 50% as a measure or mean threshold to do that. And so imagine if you had entered from down here, you would have been absorbing about 50 points. So I can see where that can get a little scary. So that's why we always go down to the 5 minute so that we can zoom in, so that we can, um, I guess, be more precise, right? Because going down to a smaller time frame means precision. It's not for anything else. It's really just to be more precise, right? And so you'll find higher PD arrays up here that will allow you to get into something like this. And so that's that, guys. That was a lot of gems thrown in there. If you guys don't see the value in that, then hey, it's okay. Try my best, but we all can't reach far enough. And then of course they scream it lower. They scream it lower, and they do all that good stuff there. But let's get back to where we were, which was your rejection block. Um, Wait, hold on. Yes, I do want to exit that. So, that was that for this, right? And so this kid on the smaller time frame, if we zoom into that, what does that look like as well? Sometimes it's not going to be as clear as other times. Like right here, it's not clear. But I remember ICT had mentioned something where a rejection block, a true rejection block, looks like this. And then we'll go above here, and then we'll come back down to this. What is this? This is the same thing. This fractal right here is the same thing. How is this the same thing? Well, this is the candle's closing price, or opening price here in the sense. Wait, it would be the opening price, yeah. No, it would actually be, yeah, closing price. I'm so sorry. It'd be a down candle. So the down candle, closing price, and then this is like the low, and then price goes up and then takes it out, opposing liquidity run. And we go there, and we're using the rejection block as the factor to go higher. See what I'm saying? So just keep in mind, this is a rejection block here. What is going on with my trading view? This is a rejection block. Okay, this is what the fractal looks like on smaller time frames, and then what it looks like on higher time frames is what we just had on and what we explained. Sometimes it can do something like this, where it will be like this, go above higher, and then come back down to the rejection block, and then go up. And those are just the different variations of it. So because now we understand that that is our rejection block, we can draw it out as the rejection block. Amen. Right? And then here, this right here is the highest failure swing here. There's the rejection block there. This is the highest failure swing, internal failure swing. Remember, the bodies are up here. This wick is below the highest up close candles here. So this right here would be considered a what? An internal failure swing. Okay, so they retrace to that, right? And then down here, this right here would be the internal liquidity. A lot of equal lows here. A lot of liquidity being accumulated here. And then I said that Thursday's low was possible, but then again, it was also possible for it to be an inside day. And that's what happened. So the inside day it was. And yeah, guys. And then here we had a liquidity. the order block that goes there, all that good stuff. 5 minute, let's go back and let's put on the 5 minute chart on. More lip gloss for you guys. Let me get out of this and then let me just put on the full screen. And also, let me put out overnight session. Overnight session is again from 4 to 8. Everything else back here, you could ignore it. Just look at overnight session. There. This is where your delivery starts. This is where your day starts. Rule of thumb, you never trade inside of overnight session if you don't have to. In some occasions you can, but if you don't have to, try to avoid it, especially if there's news after overnight session, which is after 8 o'clock. If there's news after 8 o'clock, yeah, I wouldn't be trying to trade inside of overnight session. So I'll wait after 8 o'clock, and then, like I said, 8:30 was here. This was 8:30, and then they did this for the 10 a.m. 10 a.m. was here, 9. I'm using UTC5, so this is 10 a.m. And then they're just chopping it, chopping it, chopping it. And then, of course, this is all accumulation. And then we can use the same theory here. If we were to put on a, sorry, let me delete this. If we were to put on a line chart here, what is clear to you guys here? Accumulation, failure swing, opposing liquidity run. The opposing liquidity run is reaching for what? The liquidity. Where's the liquidity? That buy side liquidity internal failure swing on the 1 hour that we just presented to you guys, that I just presented to you guys. This is the rejection block up here. And you guys can see it's reaching for that liquidity. And then it can go as high as the rejection block. But it doesn't have to always go to the rejection block. But since the rejection block is there, we can wait for those candles to print, all these up candles there, and then use them as our potential quote unquote order blocks, right? Because if you know where fair value is at, you know where your order blocks are going to form. How do you know where fair value is at? Because you have to know where the liquidity is at. If you know where the liquidity is at, which is up here, you understand that that point in time or that specific price level is your fair value. And then your order blocks are going to form at the fair value. So if we're bearish, we're waiting or anticipating for bearish order blocks to form. So what does that look like? That looks like up candles forming inside of here. Point blank simple. A lot of gems. Too many. This alone is a fountain of information. And this is not my stuff. This is all TCM. And if you guys want to join TCM, man, if you guys could still get in that, I think there's not any spots left, but if you guys could get in that, man, yeah, there's a lot to learn. There's really a lot to learn. I'm telling you guys right now. So, what does that mean? We were waiting for that liquidity level here. We know that this is fair value. We know this is where our order blocks are going to form. All these up close candles, and then up close. The up close candle that forms, if you want to refine it, is here, right? Let me do something so that you guys are not confused. This is that 1 hour failure swing. So that is where the internal liquidity was. Okay. Then they also decided to print this up close candle here. So what you're waiting for as a disciplined trader, you're waiting for them to form this order block, do whatever they want above that. But once they take this opening price with the close below, right there, once this candle forms right there, boom, that confirms the change in the state of delivery. If you guys want to go into a video where ICT explains a lot about this. For those people who are in ICT charter members or ICT students, and you were actually in a private mentorship, you could also refer to the algo series that he posted as a 2021 bonus. I think it was the 2022 or 2021 algorithmic series or 2020, one of those. Or if you never had access to private mentorship, like I said, if you guys are curious enough, it's still available for you publicly for free. You guys just have to go to his channel in the YouTube mentorship of 2022, episode 3. That is like a must study. He mentions that once the change in the state of delivery occurs, this means that price was once buy side and we took the buy side out. And once we take this low, this confirms that we're changing the state of delivery. So now we took out the buy side, so that now that means we're targeting sell side. You don't have to focus or worry that, hey, this high is going to be taken. You don't. This information is very freeing to the mind because a person who doesn't know this may think, oh, but what about if they take my stop loss here? Why would they have to do that? If the liquidity is already taken, the delivery is already confirmed to sell side. So now just point out all your sell side liquidity levels, such as your failure swings, because your failure swings house liquidity because they failed to take liquidity. So these are your failure swings, they house liquidity. And then you can target this low here, right? And if not, you can target other internal range failure swings, such as lows that house liquidity that are not stop hunts. In particular, this low. This could be enough for you. This low, this low, this low, this low. These lows are all on the menu. It's that simple. And I also want to point out that once we go here, price is efficient, buy side, sell side. So the fact that price is efficient here and we have a fair value gap in here, this can be seen as a breakaway gap because there's already buy side delivery. This is an efficient range here. And then price can be expected to leave this gap open. It doesn't have to completely fill it. And notice how the bodies close below it. They close right there at the 5-minute opening of this candle's order block. Leave this breakaway gap open, and then we leave the range. So when breakaway gaps occur, that means that institutional order flow is in the marketplace and they are willing to screen price lower. Okay, we finally have this market structure shift here. Again, that's more confirmation, direction confirmation. You can trade this here, internal failure swing, lower prices. And then, of course, we're targeting that low that we had there. And I wanted to also point out to a time element for those that are curious. 8 o'clock to 9 o'clock, we are consolidating. We're not leaving outside of overnight session range. We're not expanding anywhere. The candles are still closing inside of overnight session. 10 a.m., right? From 9 a.m. to 10 a.m., we have the same deal. Okay, it's just, it breaks out here, but does it leave the range? No. Just because it closes above a range doesn't mean that it's going to leave a range or that it left a range. You want to see sponsorship away from the range. That means displacement away from the range. Okay. And then once you start getting into accumulation, failure swing, opposing liquidity run, you could also see that, hey, this right here, this is just accumulating more positions. Imagine how many people were looking at this and saying, oh, this is an order block. Oh, this is an order block. Oh, this is an order block. And they were all placing their stops here, especially when we broke below this range here. So many stops were being accumulated here. Then, what does price do? Closing liquidity run taken. price is lower. But notice how the accumulation phase, they do it inside of 2 hours. After the 10 a.m. news, which is 10, again, remember I'm on UTC 5, so 10 a.m. is 9 here. So 9 o'clock here is that 10 a.m. news. Okay. That 10 a.m. news here is causing this, that UOM consumer sentiment red folder caused all of this, right? They were holding price obviously for a time. What time? They were holding it for the 10 a.m. news, and they wanted to accumulate positions, and then after that, they take those stops there, and then they scream lower. And then yeah, then you could have entered any of these positions up here. Here would have been a good one. Even this right here would have been a good one. This right here would have been a good one. And then they leave a breakaway gap here because we're inside of a efficient range. So this fair value gap here doesn't have to. It doesn't have to. It can, but it doesn't have to. Same thing here with this one. This is a breakaway gap inside of an efficient range. This is why it remains open. Okay. But anyways, guys, I don't want to hold you guys. I told you guys it was going to be a little longer. But I just want to thank you guys for watching, and I just hope that this community keeps on growing. And before this community grows, all glory to God. I hope that you guys all just get closer with God. And if you don't believe in Christ, it's okay. You could shame me. You can tell me that I'm wrong, but I'm gonna do it long enough so that your heart could be reached. You know what I mean? Um, because it's almost like me, right? Winning the lottery. And let's say I knew the secret to win the lottery, right? And all I have to do is tell you what the secret is, and you would win the lottery every single time it came out. Now, wouldn't that be a privilege, right? Wouldn't that be a privilege to know that secret, right? And so it's kind of the same thing with God. It's the best kept secret. You know, this journey walking with Him is the best kept secret, right? I don't want to. I don't want you to miss out. Same way I didn't want you to miss out on that lottery ticket and that secret to win so that you may receive the blessings. It's the same way. It's the same way over here, man. You know what I'm saying? It's the same way. So I really, really hope and pray that you guys all get to meet God and actually get to know God. And how do you do that? That's by reading the Word. And so I don't want to keep you guys too much here. So you guys know the traditions around here in this channel, which is what? Good, better, best. Never let it rest till your good is better and your better is best. Happy Saturday, everybody. And just remember that God is good all the time. Peace out.